Chapter 14, we'll talk about corporate governance and business organizations. This chapter is relatively short. We'll get through this, I hope, relatively quickly. Let's take a look and see what we got here. So things we want to do, of course, we want to describe factors to consider when deciding on the form of organization. I don't know if I can express enough how important this is, especially as businesses mature and change, and for reasons, taxation, liability being the biggest reasons, and regulations and whatnot may be creating some other reasons to do that now. So two, to contrast the basic organizational forms. So we'll talk about those various forms and some of the advantages and disadvantages of them. To compare the hybrid organizational forms, probably the newest one we'll talk a little bit about is the LLC. To understand the complexity of making business decisions, and it's extremely complex, and oftentimes requires assistance, in the form of attorneys, accountants, those types of things, but extremely important, in terms of saving money, both in taxes and other things, and also liability. It's huge. So size of ownership, and maybe size isn't the best term. I guess it kind of is. Closely held, what we're talking about here is not necessarily the size of the business. That's what I was originally thought when I saw that, but it's the size of the ownership, how many owners there are. And we can have closely held family and or friends, small businesses, and we also call this a private, private. Okay, and especially when we're talking about corporations, we would say a closely held corporation is also a private corporation. What that means is you and I cannot buy stock probably in that business. Okay, it doesn't necessarily mean the business is small or tiny. I think one of the biggest privately held businesses is Cargill. And it's a huge conglomerate and big international business, and yet you and I can't buy stock in that because it's still privately held. There's other huge businesses that are like that. Some of the businesses that recruit here, I think, like Peter Kiewit and Sons, is privately held, and huge business, with tens of thousands of employees perhaps. So publicly held then is those that are traded on the public stock exchanges. Oftentimes those that we're familiar with, that we talk about in finance class and some other classes. It's Google and Microsoft and Apple. Those are some tech ones. Of course, oil, you could have Exxon and Chevron and ConocoPhillips, and industrials like GE. GE is also a conglomerate, but we'd call it an industrial. Mining, oil, just on and on and on, right? So those are ones that we talk about, and when they're publicly held, they're subject to a lot of new regulations and whatnot as a result. One reason some companies choose to be closely held. I'll give you an example of a company that sometimes they go. The most common course is that they'll go from closely held to publicly held. But give you an example, Dell Computers, started Michael Dell in his dorm room at University of Texas, or one of those, and he made so much money. He was making so much money putting together computers that he quit school. His parents didn't like that idea, but he did anyways. He was making something like $10,000 a month at the time, profit. And he started then putting together computers outside of that and created Dell Computers, which eventually went public, and you and I could have bought stock. Well, then his PC demand started to diminish, and the company started to lose its luster. He actually ended up buying it back. Okay, and so it became went from being a publicly held back to being a closely held. Held primarily, maybe totally, by Michael Dell. He may have had some other investors that were in there on him. One of the nice things for him is he doesn't have to disclose then things like quarterly statements, financial statements, and things like that you and I expect and can get on publicly held companies. So, which is not a basic form of business organization. Well, a corporation certainly is, a partnership certainly is, and so is a sole proprietorship. So I guess in the process of elimination, we'd say a union. I mean, unions are involved in business, obviously, but they aren't a business organization. So things that we do, right? cost of creation is huge. Some forms of business have no creation cost, zero, up to some that are more complex that could cost, even for a basic one, several $1,000s. And for a publicly held corporation to go through that, you're talking about costs of tens of thousands, hundreds of thousands, maybe millions of dollars in some cases to go through that process of going public. Continuity, stability of the business. Certain, sole proprietorship, the business actually dies if the owner dies, right? Whereas corporations have an indefinite lifespan, and we know, there's corporations like GE and some others, that have been around for well over 100 years. Okay, and obviously their founders are long since gone, but the corporations still exist. Control of decisions, yeah, and owner liability. These two, are huge. I think probably as much as anything. The cost of creation becomes a lot smaller sometimes if you're worried about owner liability and taxation. I might give you an example of that a little bit later. So here's a good deal. You probably ought to kind of study this. So proprietorship, to create it, just do it, right? And literally that's the case. I mean, literally, if you wanted to start mowing lawns in the neighborhood and they were paying you for it, you technically have a sole proprietorship. You did nothing, and that's really what it takes to form a proprietorship, right? Continuity is based on the proprietor, what they want to do, or if they live or die. Liability is unlimited, and taxation is single, meaning that all the money that you make as a lawnmower, you pay taxes on individually, okay? Minus, of course, normal costs that are involved in doing the business. A partnership, this says agreement question mark, and let me emphasize this. I don't think I have it later in the PowerPoint, but in Montana there is no requirement to have a partnership agreement. I don't know about other states, but in Montana there is none. Okay, so a partnership is every bit as easy to create as a proprietorship, and I can tell you from personal experience, I have a business partnership with a person, and we've been partners for 20 years, I think, maybe longer, and we have never ever had an agreement. Perhaps not the wisest thing, but it's worked okay for us, and the type of business that we're in is it works okay. Okay. If I were to do something a little bit more formal or bigger, than what we're doing, I would definitely get into some sort of an agreement. Partnerships can be easily dissolved. Okay, you can buy or sell. If one partner dies, though, the partnership dies as well. Okay, now, generally speaking, if that happens, a new partnership is formed almost immediately. If I died, my partner would within a month technically become a partner with my heirs, my surviving heirs. Control equal, right? Liability still unlimited. And one of the scary things about that is I could be responsible for actions of my partner. One reason why, doing a partnership without an agreement, without some of these limits of liability, can be a little bit scary. Okay, and again, the format of ours doesn't scare me too much, but conceivably you can be responsible for the actions of your partners and the tax. And I'm not going to talk a lot about taxes till we get down to corporation, but again, the taxes, the profit and losses flow through to the individual partners. Okay, limited partnership. You have to agree, set it up. There is still a general partner, and that general partner has unlimited liability, but other people that invest have limited liability. And this might be common if somebody wanted to start a little business, and 2 or 3 other people were gonna each invest 10 grand, maybe the total cost was 100 grand or something, and the general partner put in 70, but these other people, minority interest, but they want their liability to be limited to just that 10 grand. So when we say it's limited, that's what we mean. It's limited to your initial investment. Okay, so if the general partner screws up and the business goes to heck, or the business gets sued, he or she, that general partner, is going to be responsible for that, but the limited partners would not. Okay, LLP articles. Yep. This creates a format where even all the partners have limited. Where you see LLPs is you'll see family limited liability partnerships, and you'll also see professional limited liability partnerships. So generally it's members of a family that might go together and do an LLP, or members of a law firm, members of an accounting firm, things like that, possibly set those up. LLC, I will tell you, in my experience, has become one of the more common forms. It's, when we talked about hybrid earlier, okay, it kind of combines a lot of the best things. It's not quite as easy to set up as a proprietorship or a partnership, but it's relatively easy. You do have to create some articles and you have to register it. It can be dissolved pretty easily. Member control is equal based on, when they say equal, it's based on perhaps the membership, because there can be unequal ownerships amounts, within an LLC, but your control is based on the amount of ownership that you have. The liability is limited, and again, the taxation is single. And so LLCs have become pretty common. They're pretty easy to set up, on and on. The story I was going to tell, some rental units that my wife and I have managed for years and years, they were owned as a general partnership, and we had no interest in them financially. Still don't have any interest in them financially, but some of the partners had reasonable wealth, and I became concerned about that. And we had, of course, insurance to cover that, but our insurance policy, I think, had $1 million liability, and I was concerned that was insufficient. And so, to get enough insurance to cover the partner's wealth, I checked into, and it was going to cost it was, I think, $1,000 per $1 million of insurance, roughly. And so to get $4 million, we'd have had to pay an additional $1,000 or $1,200 per million, so it would have been another $3,000 or $4,000. Okay. On the other hand, we went and we had an LLC set up. It cost about $1,700 was the initial cost. Still maintained $1 million liability policy, okay, to cover people in case there's an accident or something like that, is rightfully it should, okay, but no need then to carry a bigger policy than that, because the liability is limited to the investment of the owners then in that case. I mean, they could still lose out on their investment, but that $1 million policy would cover most of that, okay. So it became a big cost savings for this particular to go from a partnership to an LLC. S corporation, before LLCs were pretty common. They're just like a corporation, and we're going to call these a C corporation down here, and an S corporation is exactly like a C corporation, except in the incidence of taxation and also the number of people. Okay, an S corporation has to be closely held. Okay, it has to be closely held, and therefore it cannot be public. Right? Okay, and its taxation is single, meaning that the taxes flow through to the owners. In every other sense, okay, it is like a C corporation. Okay, so in every sense, it's like a C corporation, with the exception of the taxation. Okay, and I think that's how it's phrased on the test. So it says an S corporation is like other corporations with the exception of taxation, and that would be yes, because a C corporation can be a small number of people as well. Okay, so perpetual life, so they can go on and on, right? And they're run by shareholders, they vote, okay, and away they go. C corporations are typically the big companies that we see that are public. There are other C corporations. In our area, there's a lot of farm and ranch entities that are C corporations. And it's kind of a little loophole in the law, but as C corporations, then they can pay the owners, and it becomes a legitimate expense to live on and manage the farm or ranch. And that's a legitimate expense, meaning that the the owners, owner-operators of the farm and ranch, basically their living expenses can become a tax-deductible expense, and so it becomes a pretty reasonable, it becomes a pretty reasonable way to set that up, and they do that pretty often in this area. On the other hand, it's double taxation. And what do we mean by double taxation? Well, in a C corporation, the corporation actually pays taxes. So when I say that these other ones are limited and the taxes flow through, a proprietorship, partnership, limited partnership, LLP, LLC, S corporation, pay no taxes. Okay, the entities pay no taxes. If there is a profit or a loss, the owner of that company reports that profit or loss on his or her own personal income taxes. In a corporation, the corporation pays a tax. Okay, in the U.S., I think our tax rate's the highest in the industrial world at 35%, and then states can have taxes on top of that, probably anywhere from another 5 to 7 or 8%. So a corporation might pay up to, say, 40% on its income. Then, if they disperse any income to shareholders, right? If they disperse any income to shareholders, the shareholders have to pay taxes on that as well. Okay, and they can disperse it through share buybacks or dividends. It'd be the more common way. It'd be dividends, and then the shareholders have to pay taxes on that. So that's why we say that taxation is double. I know we spent a lot of time on this, but I hope you guys do as you're planning some things. So it'll probably allow me to go through these a little bit quicker too, right? Easiest, cheapest, greatest. It says greater continuity. Well, in terms of the owner, right? But if the owner dies, technically it dies. Okay. Generally smaller companies. The reason you set up sole proprietorship and you don't worry too much about being sued and the liability is usually if you're starting out, you're just out of college, you're starting your own business, you got nothing except student loans. If somebody sues you, it's not going to matter. They're not going to get anything from you because you don't have anything. Okay, as you start to develop some net worth and some assets, it becomes more important to protect those net worth, that net worth and those assets. And you either do that through insurance, which, as I explained a little bit earlier, become expensive, or maybe you set your business up then using one of those methods to limit your liability. Flexible tax planning, yeah. Partnerships, pretty much the same thing, 2 or more. By the way, in LLCs and S corporations and C corporations, one person can own those. Common business, share profits and loss. Yep, creation's simple again. In Montana, it can be created just by going out. If 2 people go out and mow a lawn together, technically it's partnership, right? Each partner equal voice. Again, it's equal as to the extent of their ownership. It's dissolved when the ownership changes, and that's correct. I mean, by law, my partner and I, if something happens to one of us, our partnership is dissolved. But in practicality, if something happened to one of us, the other spouse, I think in both our cases, the other spouse would soon thereafter become a partner. Liability, joint, and several, and that gets back to when they say jointly and severally. Okay, that's a legal term, but that means, again, it's kind of what I was explaining, that I could be responsible for actions of my partner that I didn't do at all. And just in relation, now I'm not going to be held accountable for things that, if he gets in a car wreck that, doesn't have anything to do with our partnership. Okay, but if he makes some decisions maybe that have to do with our partnership, then conceivably I could be held liable for those. Okay, again, taxation is according to the level of ownership it flows through. Corporations, domestic and foreign. We're not necessarily talking about international here. A foreign corporation or domestic could be in-state or out-of-state. Creation, charters. Okay. By the way, corporations are creatures of states. Okay, they are created in states. They're not created under federal law. They're expensive, especially public ones. It takes a lot of money and whatnot to go into it. By the way, and I'd probably ask this on the test or on a quiz, but the most popular place for large companies to incorporate is Delaware. Why is that? Just simply because Delaware has the best, most conducive laws to corporate formation. And so you'll read, like when Northwestern Energy, right, does business primarily in Montana, but when they filed bankruptcy, Chapter 11 bankruptcy here 6, 7, 8 years ago, that went through Delaware because that's where their corporate charter is. Okay? Continuity, right? It's perpetual. Publicly versus closely held. We've talked about those issues. Liability, again, it's limited. Personal liability. Corporation is liable for whatever, right? But it's limited to the personal liability. When we talk about piercing the corporate veil and going after, and we see that occasionally, we'll see that in some cases, like Wells Fargo just got in trouble, right, for those accounts and whatnot. Okay, could you hold the people who made those decisions personally responsible? Tough. Okay, it's tough. And this probably has more to do with smaller corporations. If in fact the corporation and the person can't really be separated, that's again legalese and probably more than what we need to know for this class. It's possible then that they would allow you to not only go after the corporation but also the individual. We talk here in terms of civil law, right? A civil lawsuit versus not so much the criminal. In the criminal, if they acted in a manner, it's a lot easier to go after them. But in a civil sense, if you're suing them for a tort, for damages, for something like that, it's a little tougher to get through that. You really have to prove, and that's the alter ego theory, that they are kind of one and the same. It's difficult. It happens, but it is difficult. So how are corporates? They're shareholders, right? Shareholders get to vote on a board of directors. By the way, if you own stock in some of those publicly traded ones, I get proxies all the time that allow me to vote for the board of directors if I want to. Okay, and other issues that might become before the shareholders. And the board of directors then hires a slate of officers, and those officers then, the officers run the day-to-day business, obviously, and hire the employees and whatnot that are necessary to conduct it. If you're a corporation of one, again, some of these farm and ranch ones, they might be a corporation of one person. So one's the shareholder, that one person's the board, and is the officers, and might be the only employee as well. So it can be, okay. On the other hand, if you're if you're Berkshire Hathaway, you've got a bunch of shareholders, you got 10 or 15 boards, directors. Who knows how many officers? I think they probably have a gazillion of them because there's so many businesses. And then employees, and I forget, they employ 80,000 or something like that. So corporate taxation, again, this is the double taxation, right? So the corporation pays, this is a C corporation, okay, not the S corporation, but the C corporation. And just to confuse you, an S corporation can choose to be taxed like a C corporation, but they seldom do. So they pay a tax. They distribute the dividends or share buybacks, right, to shareholders, and those shareholders then pay a tax. So how do you avoid double tax? If you're closely held, right, reasonable officer salary, and that kind of gets back to, the local farms and ranches that we were talking about. But one of the things, my buddy and I were talking, he's got his own little business, and it's set up as an S corporation, he told me. And he's talking about the health care now and how much his premiums are gone up, and he provides health care. He's the only employee, but he provides the health care through the business, which he can do, and he gets to deduct that from his taxes. But with health premiums getting up as high as they are, we were talking a little bit. I said, well, would it be possible that you choose not to, because he's small enough, he does not have to provide health care to himself. So if he were a C corporation, then he could pay himself a salary, and he could make that salary small enough that he could receive subsidies for his health care, which might be better than the tax write-off that he gets through the business. I don't know. Again, those things get so complicated. That's why sometimes you need good professionals to help you out. employee shareholder expense accounts. Again, that gets back to in our case, in our area, a lot of farm and ranchers do that. And those family expenses can be written off because those people have to live on the farm or ranch to manage it. Capital structure, equity versus debt, we talk about that a lot in finance and whatnot. Accumulate earnings. So if you don't pay a dividend, you get retained earnings. You take a look at a company like Apple, not just some retained earnings, but retained cash. I was just watching, they estimate their cash hoard right now to be something like $235 billion. That's a boatload of money. Man. Companies can choose, again, smaller ones can choose to file as a subchapter S. Okay, so corporations, I like to say there's C corporations and S corporations. They don't really distinguish here. An S corporation then does not pay the business profit tax. Okay, all the profit and loss flows through to the owners. Partnerships, general, everybody's liability is unlimited. In limited partnership, you've got the one general partner, plus you might have those passive investors. This example I gave, maybe this guy invests 70 and these guys are 10 each. Okay, but their liability is limited to their 10 grand. They could certainly lose that, if the business goes bankrupt or something, they're going to lose their 10 grand, but they can't really get sued for more than that. S corps, pretty well talked about that. Limited liability organizations like LLCs, again, it's a non-taxable entity, so they don't pay taxes, right? All those flow through to the owners. It's more flexible than an S corp. You don't have to have annual meetings. There's a few other requirements that S corps have that LLCs do not have. Okay, and so that makes it nice. Shareholders, we don't call them shareholders when it's an LLC. We call them members. Okay. And it is a partnership hybrid. It's partnership hybrid in that there's no general partner. There's no general partnership, nor is there a general partner in a limited partnership, meaning that everybody then liability can be limited in the case of an LLC. Each partner in a partnership is jointly and severally liable for claims against the partnership. If that's a general partnership, the answer is true, right? The answer is true. Oh, trends, right? Dodd-Frank, Wall Street reform, say on pay. We're seeing more and more of that with bigger companies, that the government seems to think they have a need to try to say what people ought to get paid. We are seeing increased oversight by directors. We are seeing more active boards. Boards used to be pretty passive, and kind of let things go, whatever the officers and whatnot say. But we're starting to see far more oversight by directors. Directors are being hired that have skills and abilities and exercising some level of control. Active shareholders. Okay, if you're a shareholder, you can bring things to the meetings, the annual meeting. You're going to get invited to the annual meeting. You have every right to show up. You have every right to make proposals, those types of things. Okay, it doesn't matter how big the corporation. I mean, if you own one share of Apple, you get an invitation to the annual meeting, and then you can go and make proposals. Okay? Use of deferred prosecution agreements when we're dealing with whistleblowers and those types of things. That's it. Not too bad. Yeah, still took me almost a half hour, so sorry I couldn't get her done any quicker.